It's time for the Your Personal Bank Show with Ferenc Toth, president and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to Your Personal Bank Show, and I've got to tell you, I'm frustrated. I'm just going to put it that way. I'm usually a pretty upbeat guy, and I don't complain about things very much, but I've seen some things recently that are just, frankly, just frustrating. And one of them was, as many of you know, if you've been listening to the show, I've been encouraging people to assist small businesses. We've been promoting the Local First Arizona. It's Local First AZ. Anyway.com, and they've been giving out business grants and helping out small businesses because through this coronavirus shutdown and such, small businesses have been really affected and hammered probably more than almost as much as anyone else from a financial standpoint, economic standpoint. But I just read a situation just this weekend, actually, that it looks like I hope this doesn't stay, but the IRS is now going to eliminate deductions for businesses that have received coronavirus or stimulus government loan monies, which offsets the benefit of the loan in the first place. The purpose of the loan, of course, was to help businesses in need get through an economic shutdown that the government required. So it's through no fault of their own. And it's just really frustrating when, one side doesn't know what's going on, or there's lack of common sense, I guess is what I'm trying to say. There's some things that have gotten out of control, if you will, and it just seems like common sense has gone out the window with it. And a very, very successful person I used to know, he was famous for saying, common sense is uncommon, and it's true. So, write to your representatives, your congresspeople, contact them, let them know that this is beyond the pale. Congress can make an amendment to the CARES Act and make it fix the problem, but when you got one entity trying to collect taxes or eliminate deductions as a result. And then the other part that's really frustrating about this all is, the loans, again, where help is a, stopgap measure as a lifeline for many businesses. The second round of funding hasn't had the rush to have people, go for the loans because of all the restrictions and rules that have been put in place that weren't in the original act. It's the bureaucrats that are putting these rules into place that some of them just make no logical sense. It's a disconnect. It's frustrating when you have government entities and people who have no comprehension, no experience, I would say, of understanding what it's like to be in Main Street to run a small business. One of the requirements of the Paycheck Protection Program or the PPP loan is, 75% of the funds have to be, allocated to payroll. Well, a lot of these businesses, you take hair salons, restaurants, various things, the very businesses that this act was supposedly intended to help, they've laid off all their people. They shut down. They don't have the payroll costs, and they don't normally have those kinds of payroll costs anyway. Rent and things like that can be a very big expense with that type of business, particularly if they're in a high-traffic prime commercial location, for example. It's a lack of common sense. And so I'm hopeful there's some movement to adjust those rules. I'm hopeful that they do. If you have contacts in those areas, let your voice be heard. Let's help these small businesses, and let's let common sense start to rule some of these things. The other thing I want to talk about is, several states are starting to open up. I was excited. I was able to get my haircut a couple days ago, and it's been a long time. And we want to encourage and support those small businesses. Get out there. If you're going to get out there, go find the local small business and support them, the local coffee shop, the restaurant, the salon, whatever it may be, because, like I said, they've been suffering. The other thing is, how does all this how you affect your money? Okay, and that's one of the main things we want to talk about today, of course. And again, the thought I've been starting to share already is common sense. And I think some common sense needs to prevail on some of these things. Certainly, we're seeing a lot of historical bad news, unemployment numbers over 30 million. There's, now the Treasury Secretary and some of the Federal Reserve officers are saying we could be seeing 20% unemployment soon. Some of them are already saying the unofficial numbers are already over that. We haven't seen numbers like that, well, since the Great Depression. there's all types of different things going on. You know, banks are tightening lending standards. You know, they're tightening up and making it harder to get loans. That doesn't bode well for the real estate market. You know, we saw what happened in 08, 09 when that happened. You know, I've seen articles here talking about risking a second wave. You know, how's that going to affect the economic situation? And of course, we've seen extreme volatility in a number of different markets, whether it's, you know, the stock market, real estate market, starting to see some of that, you know, cryptos or anything else for that matter. The thing is, I think a little bit of common sense needs to come into play here, because the reality is, I mean, I'll post this on the website, but there was a chart just put out by CNBC a couple days ago showing the recession job losses and showing every job loss recession, for example, since World War II. And the chart is eye-opening. I mean, we're in the first month worse than the Great Recession of 08, 09, nearly twice as bad already. And if you look at the chart, it's hard to see a visual on the radio. But when I saw it, it was I knew it would be bad. It's just eye-opening. I mean, it's a straight line down. And where that ends at this point, we don't know. Again, how does that affect your money? Well, it's real simple. I think Warren Buffett probably said it best in his recent stockholder meeting he had just very recently. And he basically said, here's the reality. Nobody knows what's going to happen. He says, I don't believe anybody knows what the market is going to do tomorrow, next week, next month, or next year. I think that's very sage advice. And again, a little common sense needs to come into play here. If you're going to put some monies at risk, and you're certain you're not going to need those monies for an extended period of time, most people talk about 5 to 7 years as a rule of thumb. Okay, if you want to take a flyer and play and see what happens, that's your decision. It's your money, of course. What I hate to see is people that are doing that type of thing with monies that they know they're going to need at some point in the future. And the thing is it wise to play or risk, I should say, with those types of monies, especially when we're in a situation that, frankly, nobody knows really what's going to happen. And I think that's where common sense needs to come in. And one of the things I share with people all the time, you've heard me talk a lot about the 3-bucket strategy recently. You want to have a certain amount of money in an emergency bucket. 6 to 12 months is a good idea, of course. The middle bucket, that's monies you're going to, cash flow, interest earning type buckets. That's monies you're going to need in the next 1 to 5 years. Some people say 7. And then your growth bucket. That's, money is going to grow, but you don't need to touch it for at least 5 years or longer. Modern portfolio theory, I've shared this many times, uses a rule of thumb of, 60-40 is a good rule of thumb in terms of growth to safer assets, okay? During times of crisis, financial crisis, or uncertainty, some common sense needs to come into play, in my opinion. And probably you want to make sure that is adequate or even more so. One of the things I talk about all the time is I've been talking to a lot of folks who are struggling these days with their businesses, their finances. Others are fine, which is great. But, they're still concerned because, again, don't know what's going to happen. Locking down and making sure the monies you're going to need in the future are going to be there, I think is a key. And one of the things I always tell people is, look, there's a certain amount of money we know we're going to need in retirement. This isn't a game. We're going to need those monies. It costs a certain amount of money to live. You want clothes on your back, you want food to eat, you want shelter. Okay? We can put a reasonable inflation factor on that. And we're going to talk about that a little bit more in the next segment, about what's going to happen down the road a little bit more, what could happen. My point is does it make sense? Have some common sense. Does it make sense to put at risk those monies you're going to need, especially during a time where, even where Warren Buffett says, nobody really knows what's going to happen. Stay tuned in the next segment, because we're going to talk about some more of those things and try to apply some common sense to our money situations going forward.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to your personal bank show with president and founder of Secure Estate Management, Ferenc Toth.
Welcome back to your personal bank show. And I'm talking about today about common sense. You know, common sense is a very famous person, person I knew and respected used to say, common sense is not common. And he's right. And there's a lot of things going on, a lot of frustrations. Emotions are high with the coronavirus, the shutdowns and all the things. Some states are starting to open up. Some are still saying shut down. There's a lot of uncertainty and unknowns going forward. And I think it makes sense to proceed with caution and have some common sense. Make sure those cash reserves, make sure those are adequate. Make sure your income is secure. And even if it is, I'm talking to many people with jobs and businesses who are doing fine financially right now, retirees, various things, but there's some uncertainties involved with some of their income sources. Okay, real estate is starting to see an adjustment in the values and things, and then banks are tightening up lending standards, and that's probably going to have an effect on the values of properties. And of course, there's a lot of consternation in terms of renters. Are they going to, if you're a landlord, are they going to continue to pay their rents? How much longer? There's so many uncertainties out there right now. Again, some common sense needs to come into play, and you got to make sure that those monies, those assets are in reserve. Don't put at risk something that you know you're going to need. In retirement planning, always one of the things I do all the time with folks is determine. So let's determine the amount of money you're going to need in retirement. That's a known need. Housing, clothing, food. We know we're going to need those things. We can take a reasonable life expectancy. We can take a reasonable rate of inflation, and we can determine what those needs are. And then the question I often ask people at that point is, and does it make sense to put that known need at risk? It makes sense to think about, especially in financial crisis periods like this. And so that's why I always say, let's use a little bit of common sense in our planning. And then if you want to risk or put the rest at risk, go for it. I guess what I'm saying is I'm tired of hearing the same old. We need some real answers. A great example is, we hear this all the time, hang in there, basically told not to not to do anything. Hang in there, relax, it'll get better, all those kinds of things. And like I said, in a normal economic cycles, those are typically good advice. But there are times when things are different. And I think most people would agree at this point, things are different. This is some unprecedented times that none of us have ever dealt with, and, let's use an example. The Federal Reserve is certainly not just sitting back and doing nothing. They're doing all kinds of things. They're definitely reacting in a big way. Governments around the world are not sitting back doing nothing. They're taking steps and doing things that are unprecedented. And we don't know what the long-term impacts of many of these things that are going to, how they're going to affect us and how our money is going to affect us. And I'm not trying to say this to scare people. I'm trying to say this to get folks to think. And think about, for example, we have an unprecedented level of debt at this point. Now, debt's not a problem at the moment. Interest rates are extremely low and all that kind of thing, of course, in the midst of the crisis. But what's the longer-term impact going to be of all that debt? Are we going to have deflation, a deflationary cycle some economists talk about? Are we going to have inflation? Certainly with more dollars, you would think prices of things would go up because there's more dollars chasing those assets, okay? So these are things to think about and consider, not only for the immediate short term. We've talked a lot about that, making, buckle down, make sure you've got the cash reserves, make sure you have the incomes, secure those as much as possible. Reduce the risk as much as possible on your monies. That's why your personal bank comes into play so strongly in these kinds of areas. By the way, it can be a long-term growth tool really well, by the way. But in the longer run, how are things going to play out? Having some safer money, some consistent, steady Eddie income growth type of things with some guarantees makes a lot of sense, particularly with the level of unknown and uncertainty that's out there. Just like I quoted Warren Buffett in his most recent stockholder meeting. Nobody really knows what's going to happen next week, next month, next year. We just don't know. So having some common sense, being smart about this, being strategic about it, and there's nothing wrong with getting on the sidelines, if you will, and putting some money to the side, hey, and if you can let it earn some interest and get a decent, halfway decent return these days, why not? You don't have to go to cash. Certainly you can. But if this turns out to be something that ends up lasting longer than a lot of people initially thought, I liked what one article said. One very economist said, this is starting to feel like a home remodeling project. Initially we thought it would be quick and easy, and the contractors told us it'd be a fairly simple process, but delays have occurred and cost overruns occurred. And this is turning out to be a bigger, longer, and bigger mess than we originally anticipated. And I think that's a good way to look at it. And is there going to be another wave this fall or sometime in the future? We just don't know. And so there's no harm in getting on the sidelines, if you will, and getting some of the money set aside. And why not, look at something that maybe you haven't looked at before, like a personal bank tool. I know there's a lot of folks and a lot of information out there, both pro and con. Go to yourpersonalbank.com and look at the information. Contact us. I'd be happy to talk to you and answer some of your questions and show you where this could be a good fit in terms of that safer bucket of money, and can accomplish some things that maybe you haven't accomplished with your money elsewhere. I mean, one of the things I get all the time, one of the things that surprises people, because I don't talk about it a lot, but built into these personal bank tools is a living benefit that basically can reimburse for long-term care or medical type of expenses. It's a great tool to protect. It's a protection tool for those kinds of things that can happen to people. And statistically, unfortunately, will happen to a lot of people. There, of course, is a death benefit involved. If you listened to the show before, there's a death benefit component. And God forbid, if you have loved ones that are relying on you for income or whatnot, or your business or those types of things, those are needs that are very valid and important. Okay? So there's more to it than just growing your money, although that is a major aspect. By the way, there's tax benefits too. It's tax favored. You can grow tax deferred. You can access the funds through policy loans on an income tax-free basis if it's done properly. I mean, there's a lot of benefits and a lot of changes and improvements to these tools, these financial tools, where if somebody looked at it a few years ago even, in some cases almost wouldn't recognize the differences and how much is improved. There's been significant improvements in flexibility and funding these things and all this type of thing that didn't exist before, okay, in general. So these are things that are looking at, like I said, the Federal Reserve, governments are taking unprecedented steps, and we're in an unprecedented time. It's a good time to take a look and really consider, what should I maybe do different, or what can I do to reduce the risk or improve my situation financially, or secure that income or those assets or those monies so that I don't have to, ride the roller coaster, I guess is one way to put it, and put monies at risk that potentially I'm going to need at some point in the future for retirement or those types of things. I say this all the time in retirement planning. Putting money at risk that you're going to need for your basic living expenses, does that make sense to you? And often, in most cases, it doesn't for a lot of people. So like I said, let's have some common sense about some things here. We're in unprecedented times. We don't know what's going to happen. If anybody tries to say they know what's going to happen, they're just guessing. Now, they may be making some educated guesses. Don't get me wrong. I don't want to disparage folks that are trying to give us some direction. But the reality is, almost every article I read, every person that I talk to, if they make a prognosis of what they think is going to happen in the future, almost without an exception, there's a caveat, and they'll say things like, well, obviously if a virus, we get a reflame up of the another cycle, or a vaccine comes out or something like that, those are game-changing type of events. Everything that I just said or what they just recommended, it goes out the window. Because again, this isn't a financial crisis. It's affecting our financial situation, certainly, but it's not a financial crisis. It's a medical crisis. And changes can occur very, very rapidly in that. I mean, just a few months ago, it hasn't been that long. Life was what most of us would consider normal. Look how it's changed, how quickly it's already changed. It could change that quickly in the future. Are you prepared for it? We're going to talk about that in the next segment. So Stay tuned.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back. We've been talking a lot about common sense, and unfortunately, common sense is not so common, as was very famously quoted by a very successful person I used to know. You know, there's been a lot of uncertainty. There's been a lot of change, very rapid. In fact, that's another human nature thing that's it's kind of difficult to wrap your brain around sometimes and realize what's going on, given how fast the changes have occurred. Dramatic, quick change. And on one hand, we've got Federal Reserve and governments around the world taking dramatic, unprecedented actions, and yet, and many of us at the same time are told, well, hang in there, it'll get better, don't do anything different. That may be the right advice for you. I don't know. I don't know your situation personally. But I think it's worth taking a look at or getting a second opinion to determine if maybe that isn't the best advice for you right now. Again, we're in unprecedented times, and reducing your risk, ensuring you have income, assets, protecting the downside, all those types of things are as important as ever, if not more important than ever. And protecting your future and your retirement and things like that and putting those things at risk may or may not make sense for you at this time. It's certainly time to take a look at it. And that's my point, is all I'm trying to say is take a look at it. Contact us at yourpersonalbank.com. No cost, no obligation. Let's take a look at what your situation is, and let's see if you can reduce some of those risks and put yourself in a better financial position. Like I said, I meet people all the time online. I've been doing it for years through speaking around the country to investor groups and various things. I've even shared this with a lot of our clients and folks I've been working with recently. You know, there's a lot of them, their lives have been upended. Their businesses, their jobs and things have totally changed. They're working from home in many cases. I've been doing it for the last 3 or 4 years. This is kind of normal for me. And in fact, about almost 90% of my client meetings last year in 2019 were by GoToMeeting or phone. So this is nothing new in terms of how I'm operating as a business and working with clients and such. And the other thing I guess I want to share is I've kind of become something of a business consultant. If you have a small business, I've been working with a lot of small business owners. I'm an entrepreneur myself. I've owned a retail business. I've owned a service company. I've owned a financial services company now the last, 16 years. I'm the chairman of the board of a bank in formation, learned a lot about the banking industry. My wife calls me a Renaissance man. I have a wide, diverse level of experience over 25 years of being a business owner and working through economic cycles. I had a real estate investment business too. In fact, I often tell people in 08-09, I was on the front lines in Phoenix, owned a real estate investment company and a financial services company. Both of those got creamed in terms of the economy, and we were able to survive that. It wasn't easy. There were some things some hard decisions, and some good people got hurt through the process, but we did survive that. And as often put, a number of our competitors went out of business, and we came back stronger than ever as a result. There's lessons that I learned from those experiences, and this is one other thought before I jump into a few things, is I often tell people, if you're going to talk to somebody about and getting some advice from them, whatever that advice may be, make sure, I always say, look, if you're going to get advice from a business person or a financial person, make sure they've been in the business, no offense, but they've been through the 08-09 cycle. They've seen the good and the bad. Because if they've only seen the good, for example, we had a record bull market, a record strong economy, and if that's all they've ever experienced, they don't understand what it's like to survive the bad times. Perfect example, I was talking to a key employee last week of a business, and he's good friends with the business owner. They pretty much started this company together. And his friend is not, as he put it, it's not handling it well. And I said, well, what do you mean? And he said, his last statement was, when they announced, and he's in a state where they're not going to open up until the end of May, he said, I just hope I don't drink myself to death before we can open up. You know, I want to make a point on that. First of all, we're talking about serious stuff here, folks. You know, people potentially losing their businesses and jobs is real, and it's devastating for many people. It's not just about money. And one of the questions, we talked about a few things, and one of the questions I asked is, well, how long has this company been in business? And he said about 8 years. I said, oh, that answers a lot of questions. He goes, what do you mean? Well, he started the company during a good economic cycle. He's not experienced what it's like through a bad cycle. And you have to operate your business much differently, especially in a significant one like 0809 was, and this one's turning out to be. You learn a lot of wisdom. You learn your lessons in the hard times. When things are great, we don't make changes, do we? That's human nature. You know, we don't learn a lot from success. We learn from failure or challenges, okay? So I would say that holds true also. If you're getting advice from somebody, whether it's business, financial advice, whatever, I would also find out, how's that person experienced the 0809 cycle, for example? Do they have experience on both sides of the coin? And keep that in mind, because that's so important, particularly in these times. And that's why I've been really so strong about making sure you got those reserves and making sure you've got that income and you've got the safer, you've reduced your risk and those kinds of things and cut back your expenses and all those kinds of things. Because guess what? We had to do in 0809 with our companies. You know, that's what you have to do. And that's why I always teach this one concept about thinking like a banker versus an investor. It's so appropriate, particularly in these times. And this is a financial literacy concept that some have heard of. Most people are not familiar with. I teach this all the time because, you know, this is the Your Personal Bank show. We're teaching people how to think like bankers versus investors. You know, I always say you can like banks or hate them. Doesn't really matter. We can agree that they're savvy about money, and we can learn from them, okay? And what the difference is really quite simple. What most investors do, I think we all can agree pretty much, is that they trade hard-earned dollars for assets with the expectation the asset will increase in value, right? And in most cases, I find most people focus on the potential gains only. I mean, have you ever talked to somebody who's done an investment? I don't care what the investment is. It doesn't matter. And they're excited about it. And what do they always say? Well, we made X amount of money or X amount of percentage, right? Which is cool. That's great. I mean, that was the goal. That was the purpose, right? But often when I'm talking to somebody about thinking about that, an investment, I'll ask them several questions. And one of them I'll ask is, well, if things go wrong, what's your recourse? What's the downside? And I often get a long pause. You see, not only in most cases when I talk to people, they don't have a plan of what to do if things go wrong. They haven't even thought about it. And my comment to that is, well, a banker would never approach investing or that way at all. Banks and bankers are risk adverse by nature. Okay. So they address that, of course, but it's wise to address that. What's your plan B is another way to put it. You always want to have a plan B. And like I said, this recent coronavirus financial situation, of course, has brought that to light and reminded people of that lesson. So, you know, what's the recourse if things go wrong? And the other thing I always point out to people too is, look, if you buy a stock or a piece of real estate or a business or whatever that asset may be, can you tell me what it's going to be worth in a year? I mean, especially right now, even Warren Buffett is saying nobody knows what's going to happen in the next year. I mean, gosh, if he doesn't know, how are we supposed to know? So the reality is that's kind of true all the time, though, if you think about it. I mean, we can look at charts, we can make estimates and such, of course, but the reality is we don't know what that asset's going to be worth at some point in the future. And like I said, this isn't from me. This is from many success books I've read over the years. This is a common thing where it's shared that, you know, investing primarily for appreciation is just another form of gambling. And if you think about it, really, how is it any different? You hear about people, can't go to Vegas right now, but if you could, people talk about when they go to Vegas and the winnings and stuff. You never really hear about the losing. And what's interesting is, we all know that those hotels and casinos, their palaces are beautiful. And the thing you got to consider is, were those built on people's winnings? The answer, of course, is no. So obviously a lot more people lost. And folks lost a lot more than they won, didn't they? And that's the nature of how it goes. And I'm not saying the stock market or real estate market or things like that are like that. But what I'm saying is there certainly is risk to the downside. And can you handle that risk? And will that impact your future? And if it will impact your future negatively for retirement and things like that, you've got to consider what's your plan B. We'll talk about that a little further in the next segment, so stay tuned.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Well, we're rounding third, and we're coming into our last segment. We've been talking a lot about a lot of things, but mostly about common sense. You know, we're in an unprecedented time for most of us. We haven't experienced a pandemic. We haven't experienced the financial ramifications of that. And the reality is nobody really knows what's going to happen. Again, I've shared this already, that Warren Buffett in his most recent stockholder meeting said that nobody really knows what's going to happen next day, next week, next year. And I think that's very sage advice. My point is quite simple. I really want to let people know that you really need to consider looking at things maybe you haven't looked at before instead of just staying pat. Certainly, Federal Reserve, governments around the world are not staying pat. They're taking actions and steps that affect our money, dramatic ones, unprecedented, historical steps that some of the short-term ramifications we're not even sure about, and certainly the long-term ones we don't know yet. And these are things that need to be addressed and looked at. And I've shared, look, reach out to me. I'd love to talk to you, contact you, discuss your situation at yourpersonalbank.com. Particularly if you're a small business owner. Many small businesses have been hit harder than almost anyone else in this situation. You know, being forced to shut down your business that maybe had been open for years, decades even, through no fault of your own, and suddenly you're dealing with a crisis that came out of you weren't expecting. How do you navigate this? How do you get through this? How do you come out stronger, better, leaner? You know, all those kind of things. I've got a lot of experience as an entrepreneur. I can help. If nothing else, it's a sounding board. That's one of the things a lot of my clients have said, gosh, thank you for giving me some ideas that I just hadn't considered. I was talking to a salon owner of a second-generation salon business literally just a day or two ago and gave him some ideas that were helpful. Talked to another real estate investor last week who was building some lots and building some properties and was really uncertain about what to do. And we gave him some thought. He goes, thank you so much. I never considered that. I've done developing. I've built houses. Okay. So I gave him some ideas from the experiences that we had, and it helped. Okay. So my point is, contact us at yourpersonalbank.com. I'd love to share and help you. And even if it's about the financial tool, yourpersonalbank.com, or some other financial tool, or it's just good general advice, I want to be able to help folks through this time, through this crisis, this unprecedented crisis. Learned a lot of lessons for 0809. As I said, I was in the front line owning a real estate investment company and a financial services company at that time. And in Phoenix, we were in the eye of the hurricane. We were the eye of the storm through that. And thankfully, I'd had some experiences from the previous couple of cycles. Folks, as an entrepreneur, this is my fourth rodeo. Third as a financial agency owner. So there's some lessons, there's some experiences that you learn from those previous times that apply now. And I'd like to share those with you and help you navigate some of those things. And if nothing else, just be a sounding board for some folks. Why do I do this? Well, one, I have a passion for it. I've been sharing, with Local First AZ. We've been promoting them in terms of, helping out small businesses and giving them advice. But I recognize that this is, for small business owners in particular, one of the most challenging times ever. Okay, and I want to help out and share that information and help make those businesses survive and then thrive. Individuals, retirees, all of those, same thing. Not only just how do you survive this, then how do you thrive through this? That's my goal. And that's what I want to try to help people do. And why do I do it? It's really quite simple. One, like I said, I have a passion for it. I love doing this. I've been doing this is my 23rd year. And you know, if you get up and do what you love doing, it doesn't feel like work. My wife, when I always say, well, I used to come home working from home, obviously, mostly these days, and have been for a while, frankly. She goes, I can always tell you when you've had a good day. Your eyes are lit up. You're on fire. You're excited. I said, yeah. I talked to somebody. I was able to make a difference. I was able to help them with their business, with their personal situation, financials, whatever it may be, because money and finances have impact our lives in so many ways. It's not the most important thing in our lives. I think most of us would agree, but it certainly has a huge impact on our lives. And if we can get that in line and straightened out, it could be some financial literacy stuff. I've often shared with when I'm sitting down with a couple or a client, I'll say to them, look, today there's going to be no product or discussion. We need to talk about the 800-pound gorilla in the room. We need to talk about some situations. We need to get your financial house in order first before we can help you move forward. And again, why do I do it? Like I said, have a passion for it. 2, I've always believed in Zig Ziglar was probably the most famous person for saying this. And he would always say, look, if you go out there and help enough other people get what they want, eventually you'll get what you want. And I firmly believe in that. And I've seen it happen over and over and over again. I've had folks who have become friends, clients of mine, as a result of helping them out at a time of need. And those become friends and clients for life. And, you know, that's kind of, for me, that's what life is about. Love what you do. Have a passion for what you do. I always share with people and young folks all the time, follow your passion, and the money will follow. Then the money will follow. Become great at what you do, and then the money will follow. Don't follow the money. And so it really boils down to that. I love what I do. I have a passion for it. I have a passion for making a difference and sharing some creative thoughts, sometimes out-of-the-box things that most people haven't heard from a traditional advisor. Okay? I'm not a traditional advisor. I'm not a traditional person, with my background as an entrepreneur of several businesses and such. I've often said, as a financial guy, I don't look at this. I have a lens as an entrepreneur, so coming at it from a different angle. And so sometimes I see things, share things that folks haven't heard before, but needed to know or needed to hear. One of my favorite sayings, we make a joke out of it all the time, and as I get to know folks over a period of time, I'll say, remember back when we first met and we talked about your situation, and remember when I said to you, do you want me to tell you what you want to hear or what you need to hear? And we often have a joke about it later. And that's my point is, I enjoy building those relationships and working with those folks, and not just sharing the same old mantra, hang in there, it'll get better, don't worry. You know, again, most of the time that can be good advice, but you know what? There are times that you don't want to hang in there. You got to make some changes. And financial crisis creates situations where change is required in many cases. Certainly, like I said, governments around the world, Federal Reserve, and other banks around the world are making dramatic changes, historical, unprecedented changes. You might need to react to that, both in the short term and for the longer term. Let's discuss those things, and let's get you in a position, again, where you can survive this with a minimum of stress, with a minimum of financial stress, okay? And then thrive. Thrive through this and after this is over, because this will be over. We'll get through this like we get through other stuff. I started frustrated, talking about some of the problems. I'm going to finish on a high note. We will get through this. And if you want some advice or a second opinion, or maybe something just out of, that's not the same thing you've heard over and over again everywhere else, and you realize what you've been doing isn't working, contact us at Your Personal Bank. Love to talk to you about it. Let's see if we can help. Let's see if it's a good fit. Stay tuned. We'll talk to you next week.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.